Good afternoon, everyone. I am Neha Behl, the Company Secretary and Compliance Officer of RACL Geartech Limited. On behalf of the company, I would like to extend a warm welcome to all of you to this post-results conference call for the first quarter of the financial year 2025-26. I will be your moderator for today's session. Before we begin, I would like to make a few important announcements. Please note that this conference call may include forward-looking statements based on the company's current beliefs, opinions, and expectations. These statements are not a guarantee of future performance and are subject to various risks and uncertainties, which may cause actual results to differ. Additionally, all participant lines will be on mute during the presentation, and we will have a question and answer session at the end of the presentation, where you can ask any question that you may have. If you need any assistance during the call, you can submit your questions via the Q&A box or raise your hand as per the available options on the screen, and we will assist you accordingly. Please be informed that this call is being recorded. We are pleased to be joined today by the management team of RACL Geartech Limited, represented by Mr. Gurcharan Singh, Chairman and Managing Director, Mr. Jitendra Jain, Chief Financial Officer, Mr. Prab Mehar Singh, Chief Operating Officer. With that, I now invite Mr. Gurcharan Singh for his opening remarks. Over to you, sir.
Hi friends, hi colleagues, good afternoon. So it's really my pleasure and of course my always inspiration to keep it interacting with you every 3 months. We eagerly await always these investors call because we also get lots and lots of insight from our investors and analysts fraternity. So it really gives us many new avenues, many new ideas to generate, and of course it keeps my CFO also on his toes to keep preparing always for the numbers and of course improving the performance. So definitely it's our pleasure to meet you, interact you, and we really love this journey of our quarterly investor call, which started I think 5-6 years back. How many years precisely? Maybe 6 years. 6 years. And when I feel we are seriously doing every 3 months.
Yes, sir. Yes. Every quarter.
So we are a disciplined company, so always maintain discipline. Huh? And some of your suggestions are always there that after the quarterly results, we should convene the calls as soon as possible. So now this time we have reduced the gap, and I think just in a gap of 10 days we have done it.
Yes.
So I hope it will be happiness to all you guys, and definitely it's during the day we'll interact a lot and we'll update you what all we are doing and what all we are going to do further. And that's it. So I'll just hand it over to JJ if you can really run through the presentation, and Prab, then Prab, you are online? Or?
Yes.
Good afternoon, everyone. This is Jitendra Jain.
JJ, I think display settings you need to make as duplicate the screen. Yeah. Yes.
It's fine now?
Yes, it is fine now. Yes.
Stop share. So good afternoon, everyone. This is Jitendra Jain, CFO of the company. I welcome humbly all of you in the first investor interaction for financial year 25-26. And basically, I think the rains are there in almost all the metro cities and all. So I think good weather is there everywhere. But Mumbai is not in that good shape. So we'll start with the basic introduction of the company. Next. So as you all are aware, your company is more than 4 decades old. We established in 1983. FY 25, we clocked a revenue of close to $50 million. Our total number of employees, permanent employees, are around 832. We are headquartered in Noida. We have 2 manufacturing locations, one in Gajraula in UP and another one in Noida, again UP. Our corporate office is based at Noida, and we have 4 warehouses across various places in Europe. Our product applications, we are there in 2-wheelers, 3-wheelers, passenger cars, ATVs, commercial trucks, across all the segments in the automobile industry. We have 22 active customers and more than 900 plus SKUs. Our product range ranges from transmission gears and shafts, sub-assemblies, precision machine parts, chassis parts, and industrial gears. We are A- rated by CARE. We are listed on both the stock exchanges of India, BSE and NSE. And we have one subsidiary, 100% subsidiary, which is based at Austria. We have all the certifications which are required in India and globally for running a manufacturing facility. Our core competencies includes everything, starting from gear cutting to precision machining, aluminum machining, heat treatment, process R&D, concurrent engineering, laser welding, laser cutting. We have the capability to conduct all the processes, complicated and latest processes which are required for the manufacturing of gears and other automotive components. Next. Now coming to the financial performance for Q1 25-26. Next. So Q1, we clocked a turnover of 107.96 crores, close to 108 crores. The bifurcation for the same is around 65.5 crores of turnover was exports, 28.2 crores was domestic, 6.17 crores was other operating income, and close to 8 crores was other non-operating income. Now, due to that, our bifurcation of exports versus domestic has changed a bit in Q1 as compared to last few quarters. So our exports turnover now contributes about 61% of our turnover, and the domestic turnover, including operating and other non-operating income, is close to 39%. Next. Now this is a quarter-on-quarter comparison. So we have clocked a turnover of close to 108 crores as compared to 105 crores in Q1 of last financial year, which is a growth of about 2%. Our EBITDA is 26.8 crores as compared to 22 crores same period last year, so which is a growth of about 20%. And our PBT margins are 11.25 crores as compared to 8.43 crores of Q1 last year, which is a growth of close to 33%. And if I talk about the main financial ratios and all, so our as compared to Q1 of last year, our gross profit margin is 74.57% as compared to 71.65% last year. EBITDA 24.83% as compared to 21.1% same quarter last year. PBT 10.42% and net PAT of 7.68% as compared to close to 8% and 6% respectively for last quarter. Next. Now this is the slide which we have started for last few quarters. Basically, we give the profitability comparison of this quarter as compared to the last quarter, same quarter last year and the last quarter. So as you have seen, our as compared to Q1 of 2024-25, our EBITDA margin has increased by close to 3.72% and PBT has grown by about 2.45%. And as compared to Q4 of 24-25, EBITDA margin has grown to 2.15% and PBT margin has grown by almost close to 2%. So this is the broad breakup of headwise comparison from these respective quarters. And our EBITDA margin, if I compare with last quarters and all, from Q4 22.68%, Q1 of last year was 21.11%, and this year Q1 we have clocked almost 24.83% of EBITDA. Now coming to the latest development. So we have added, I'm happy to share that we have basically added two additional directors on our board, and I'm really happy and excited to introduce both the directors. Now, first I'm happy to introduce Mr. Praveer Kumar, who is a retired IAS officer. He has been appointed as a non-executive independent director in the company. Just to give a brief background of Mr. Kumar, Mr. Kumar holds a Bachelor of Technology degree in Electrical Engineering from IIT Kanpur, where he was a gold medalist and he was also awarded as an all-rounder. Mr. Kumar is a 1982 batch IAS officer of UP cadre. Mr. Kumar has served several various departments in central and state governments, which include UP State Road Transport Corporation, UP Agro Industries Corporation, Ministry of MSME. He has also been the Development Commissioner of Kandla Mundla and Dahej SEZ in Gujarat under Department of Commerce. He has worked as a DGFT in Ministry of Commerce and Industry in the rank and scale of Additional Secretary to Government of India. And it is proud to share that he was the one who has drafted India's foreign trade policies at the time of 2015 to 2020. He is currently the managing partner of Oxford Consultants LLP, which is engaged into providing technical consultancy in ESG and CSR. Next, I'm happy to introduce Mr. Rakesh Kapoor, who has been appointed as a non-executive director in our board of directors. Now, Mr. Kapoor is a seasoned techno-financial professional with over 48 years of experience in the corporate and financial sectors. He has spent more than 20 years with IFCI Limited, a premier financial institution, where he held various roles in project financing. During his tenure, he has handled a diverse portfolio of projects across sectors such as steel, cement, chemicals, textiles, and other infrastructure companies. He has also served for 5 years as managing director of IFCI Factors, a subsidiary of IFCI Limited, engaged in factoring and short-term receivable financing. Mr. Rakesh Kapoor was also initially associated with the company as an independent director, and he has made notable contribution during his previous tenure, bringing valuable insights, strategic guidance, and industry expertise to the board. I will hand over now to Prab to take it further.
Thanks, JJ. I hope you can hear me.
Yes.
Yeah.
Yes, Prab, you're audible.
Yeah, sorry, I was having water. Good afternoon, everyone. So the numbers, I think, were always known. So we declared the results last week. So we want to also talk about the new businesses which we are getting. The next, I believe, 20 minutes, I will try to make you understand two important things. So I've been able to spend some time on this presentation because there were a lot of questions coming in about the growth, about the sales, about turnover, about short-term, long-term. So this presentation, the next 3 to 4 slides, should first of all increase your understanding about the organization. Second, it will also try to explain you where RACL is headed. In the sense, we are very proudly always mentioning that we are one of the most preferred technology partner for a lot of these big OEMs. So how we are different from a component supplier to be called as a technology supplier. So that is one thing which we'll try to explain. And second, there are certain times when some companies invest a lot on future probable business projects which will gain mass segment across the years. So there are ideas which are always in the market. So there are companies who build businesses around that. And then there are companies who are part of the future. And then they build certain products, certain platforms with their customers, which are a futuristic vision of the application, how the world is looking like. So these two areas we will try to explain in the coming slides. And first of all, it is very good to see a full house today. I believe 75 people have never joined. So that is a good interest coming in. I don't know if that is the pressure people are trying to build or an interest. Okay, so on the business nominations, I think this is on the left is one new nomination, which I think disclosed yesterday. and maybe certain times things align. We only got this nomination 2 days back. We have been chasing or working in increasing our dominance in the domestic segment. Why? Because we believe the Indian market is also now maturing to a lot of new quality conscious products. The existing OEMs are also upgrading their platforms, their vendor base to suppliers who are more quality conscious and who work at a global landscape. We operating at 70-75% of exports, so we understand how the global supply chains are. So we were able to secure a very prestigious nomination from an Indian two-wheeler manufacturer. We cannot disclose the name at the moment since the project is under nomination, in the sense under development. Once the SOP or the start of production happens, maybe then we are able to disclose, which will be 3 to 4 months from now, but we need to check with our customer on that. So this project is basically going to be, I believe, a very high volume business for us. Typically, we operate in a premium niche segment where volumes are not too high. The variety is big. So we work with, as you know, not all, but most of the super bikes, premium segments. When we say premium is in motorcycle, anything more than 350cc is considered. Anything which is more than 800 or 600cc is a super bike. So we operate in both these platforms. So India also is now increasing. All of these conventional two-wheeler companies are increasing their presence in this premium and the super bike segment, wherein all of them have a lot of plans. For example, as you already know, we are working with Norton, which is a TVS brand. They are trying to launch, and similarly, there are other players in the industry. So we got this business nomination from a company which is already operating in the premium space in that engine segment. And historically, they have always made these gears themselves, or I would say as a backup, maybe on a supplier outside. Because we've always maintained this gear is a product not many companies want to outsource because of course, it is heart of the engine or the transmission, which goes to the tuning with the engine. So this project will be starting January 26. We will be working immediately on the sample submission. So January 26 is what the target is, but I think commercialization should start from February. So this should help us to also achieve some numbers for this financial year. Typically, it takes, as you know, between 1 to 2 years as a gestation for our kind of products to grow in the exports market. In this, since this is a regular platform which the customer is already tried and testing, they are wanting to launch us in the existing models. So the validation will be very quick. And we are hoping that when the sample submission happens in November, January onwards or February onwards, we should start the commercial supplies. The scale and the revenue from the business, again, we are not in a position to declare as of now, but in the due course, we will also declare what is the size of the contract and what is the quantum through which we are targeting. Of course, this is a high volume customer. The customer is also facing a very high demand in the market. So they also have very encouraging growth plans. Typically, they do not or take any vendor in the gear profile as of now. They were, as I said, making on their own. So this is a very prestigious nomination for us. So it corresponds to our value of catering only to premium segment, but at the same time, it also helps us to gain certain value, which is in the form of having a higher presence in the domestic market. It will help us to improve our working capital. Payment terms will be very good since the supplies have to be in India only. Okay, on the right is another new project which we have bagged from our existing customer, BRP Canada. So they make, of course, a lot of off-road vehicles, so what we call as recreational. So they make ATVs, snow scooters, ski-doos, and other equipments. So we have bagged one business order for a different product. So we are known for making a transmission gearbox. So what you see in the picture on the right is a typical transmission assembly, which has, I think, 5-speed or a 6-speed gearbox. And then what you see on the top is a shifting mechanism. So if you're driving a two-wheeler or this ATV, there is a clutch, or when the user engages that clutch, there is a shifting which happens. For example, if you need to go from gear 3 or gear 2 or how it is. So there is a shifting mechanism which is engaged to do this shifting. Till now, we were never in this. So we have bagged this order from our customer. It is a high volume business. When I say high volume, it is around 150,000 parts per annum, which should be, so we always keep in a flexibility of plus minus 20%. So we need to have capacity up to, I would say, 180,000 or something like that. This also brings us to a new product family of shifting drums. As you know, motorcycles will always have shifting mechanism. So we can now pitch this product to our existing customers so that we can also receive orders from them. In this, there are two variants. One is a manual shifting and one is an auto shifting. I think in the last couple of calls, we did explain you that we have also working on auto shifting mechanism, which I will explain you in the later slides. So these two projects are part of the new business developments, which we wanted to disclose in the call today. And the commercial supply of the second project from this BRP should also start in the year 26. Since this is an export customer, so the validations might be a bit longer. But I would say in next 6 months, sample submissions have already started. We have already submitted the first leg of samples and the feedback is awaited. So the customer is wanting to change the supplier due to certain issues at their end. So resourcing means when the platforms are already in the market, it is always faster to onboard a new supplier. So that is how these both projects, one may be February next year and this may be June or July next year. These both should start generating good revenue for us. Go next, Jay.
Yeah, next slide.
I think this is also part of a disclosure which we already made, that we are now also registered with BHEL. BHEL, as you know, is a PSU, is a public sector engineering company. They work in a lot of platforms. So we have been allotted their vendor code. It is usually very difficult because, as you know, PSUs have their own time of evaluation and then things don't move at the pace of automotive industry. So this will enable us to participate in a plethora of RFQs, which we will get directly on our portal or emails, which will be involving supply of precision engineered components. Application can be varied. And of course, here we have to work with a lot of Indian competition. So this is something which we actively will be, picking up projects.
I'll just add one thing, sorry to interrupt you, to all the colleagues. Normally in all PSUs, the business happens through GEMS portal. It means it's a tendering process. But for very, very precise components or some critical components, they have a separate procedure where they register you as an approved vendor. Now, technically, we can be a one-to-one RFQ from this customer BHEL to us. So technically, we have got an upper edge or advantage that we need not to go to the tendering process. In a particular tendering process, sometimes very unorganized sector and low-end competitions will start coming in, and the pricing L1 or L2 becomes the criteria. But when you're an approved vendor, so then we have got a privilege that if any urgent requirement is there, any business is there, BHEL can simply send us an RFQ, we send the offer, and then that's it. And if you get the nomination, we start producing. So this is a slightly, again, we say that we maintain our premiumness. So even with our PSUs, we got a separate kind of direct entry business. So no need to enter through the tendering business. Yes, Prabh, please continue.
Yeah. So of course, the scale and what opportunities this converts into, time has to tell. But of course, we will actively be working to develop. Since these are not high volume but high value, since they work in very precision-oriented environments. So we will keep updating you as and when if any new businesses are starting with BHEL.
Next.
Next. Okay, let me share my screen. It will be more. Can you stop sharing now? It's OBS. Is my screen visible?
Not yet. Yes, now it is. But just displaying the just convert into display
Yeah,
mode,
yeah,
please. Okay, cross it out. Record.
Now it is okay, JJ?
Sir, it's not in a display full screen. Now it is fine.
Yeah, you need
Now
to give a minute. Okay, so future ready. So what exactly we mean by that is the company started in 1987 or 89. Since then, we have seen two legs of business. As you understand, the company comes from a background wherein it started with a focus on aftermarket and Indian businesses of gears. Conventionally, we were two or three companies who were in India OEMs, and then that is how the business started to supply either to them. First was Yamaha, and then at that time, aftermarket was a big business. Then in 2002, the change of management happened. The company saw some red times financially. After that, the next leg was a focus on exports. So in 2004 or 2005, we shifted our focus, what we call RACL 2.0, towards making this company an export-centric organization. But at the same time, we also started working on improving the financial performance since it came from a certain legacy it had. So it took us good 10 to 15 years to establish that. And in the last 5 years, from 2015 to 2020, we augmented our presence in the market by I think reaching to a 200 crore kind of a turnover level in 2019 or 2020, 2018 to be honest. And then from there onwards, we started foraying or creating our presence into the markets which we were never there in the segment, sorry, which was the premiumness of the motorcycles. Second was the pass cars, and third commercial trucks. And then the 20 to 25 segment, where now we are aspiring to reach a certain number of 500 is 25, but 25 is already on the cards. The next two slides will explain you what do I mean by evolution of RACL 3.0. What that means is now we have reached a level we have in the terms of skill set, plant and machinery. Some of you have visited our plants in the annual shareholder visits we do. Most of you comment that this does not look like an automotive plant. This looks more like a semiconductor or a pharmaceutical plant because the kind of precision, the cleanliness, the technological mindset and equipments we have. So this has brought us to a level where we are now working on a lot of future technologies with our customers, which are still evolving, which will gain traction in the coming years. And it is kind of a first foot where not many Indian companies are also already thinking on this. And most of these technologies are widely being developed and consumed in the Western world. But as you know, India and is also now growing. The likes of Indian homegrown OEMs are also placing very competitive cars, good platforms, but they're also reinventing how the vehicles are behaving. Historically, vehicles have always evolved around engines. Maybe you take about a V6 or a V8 or a V12 engine, how it is coupled with certain turbochargers, performance. Car can go from 0 to 100 in some seconds. With the evolution of electric cars, 0 to 100 was now not a big thing. So that is not how car companies can sell. If you say my car is the fastest, even a Tata 10 lakh electric car can do faster from most of the combustion cars, because the principle of dynamics is totally different in the new evolving cars. So now what we are seeing in the automotive industry is that a lot of work is happening around the chassis. So that is what I've made this presentation to explain you, that how this is becoming the new powerhouse. A lot of differentiating technologies the car companies are wanting to launch to make the ride, first of all, more safe, second, more comfortable, and third, it has to be very much light, because the battery or the other things, the frames are getting lighter because you have less mechanical components, but at the same time the rigidity should always be there. So to augment all of that, a lot of things are coming in. And historically, if it is in a fully electric or a hybrid or a combustion, car companies have kept their chassis or the other moving instruments almost same. So these 3 to 4 new technologies which are now working. So I will explain you one by one. So these projects we have bagged maybe in last couple of years. Certain revenues customer committed to us. You ask rightly the questions, 500 crores, 600 crores. We don't see the businesses on a turnover level as a pressure to not participate in such programs. The adaptation of such technologies always take time, and this is evolution phase. A lot of companies are doing a lot of things to be differentiating from the other competition. So one such technology which we have been working for many years, this is for ZF, is this ERC, as you know. So this, most of you have visited our plant, but maybe the functioning is difficult to understand because we do the components for these assemblies. The customer is doing the electric assembly. But today I will try to explain you maybe what these technologies are. You see a lot of videos on internet how cars are smooth on the road. So ERC is one thing which is controlling a lot of such things. Right now, only 2 companies, what we know, have this. One is I don't know if I'm allowed to tell name, but both are German car manufacturers who have these applications to make their ride control more smoother. I have one video which will try to explain you. This is again from internet, how this ERC works. But in principle, basically there is what you call roll control bars. All cars have it. Tall cars have it. SUVs have it. So what that does, it prevents the car from rolling when you are maneuvering on the road. But these ones are electronically controlled. What that means is there is a bar attached to the tie rod or to the axle of the wheel or the car or the chassis. There, the ERC basically is a subunit wherein there is a care unit, there is a motor, and there is a ECU. So when you are in the car, if you are feeling any jerk on the road, the motor will run as high as 30,000, 35,000 RPM. And basically it will what do is, if suppose you are in the vehicle and the wheel on the right is going into a pothole, so the ECU will immediately sense within nanoseconds, there will be a compensating effect on that wheel through this ERC, which will give a jerk back to the wheel so that the jerk is not felt in the car. Also, when you're maneuvering on the road, if you are tilting the car, sometimes that roll means that car rotates or not rotates, shifts towards, let's say, if it is on the plane towards an angle. So this ERC also stops it from happening. Now, these technologies are being launched slowly across the car platform. So this was first launched to one of an electric car platform of that customer. And then they are now launching into their other variants. So for example, if it is a fully electric, a high-end, a 4 crore car, now they are slowly launching this platform to their 1 crore or a 90 lakh or 80 lakh car. But slowly they launch these technologies because first they understand how is the market response, how is the application, and that is how the businesses increase. So just to give an example, I don't know if this link will work. Oh yeah, it should work. जे वीडियो चले तो बताना मुझे.
Sure.
Yeah, yes, okay. Working.
It's working now.
Yeah.
But
and this all is from online data. So we'll give you the source and all. So this is what an ERC looks like. So you see a lot of gears inside. So what is that doing is there is a torque, which, yeah, I think the video is self-explanatory. So this you see when the car is without ERC, if suppose you feel a roll in the car, right? That angular displacement from the base is very high. Now with ERC, it is reduced by 50%. So what that doing is it is creating that balance. It is negligible. Similarly, as I was explaining, if you are in a pothole, so that is the jerk you will feel inside the vehicle. But if the car has ERC, this is the jerk that a user might feel. So now such technologies are very expensive. They are being designed, developed in Europe for European cars. You have ADAS coming in, cars are autonomous. So the driver dependency needs to be reduced by such things. So remaining is that. So I'll go back to the presentation. So this one technology we have invested huge. There was a certain, how things are evolving. So now it will scale up. Customers is showing good projections for 27, 28. The early adoption was not happening at the pace at which it should have. So that also resulted in some of our business not growing at the level at which anticipated, but we understand that these things take time to bring in a certain level of scale. Next is steer by wire. You might have heard. So a lot of new cars, expensive cars, long cars. So what has happened is with the cars going electric, the wheelbase has increased to accommodate the battery. So now you have a longer chassis. So what that means is that increases the turning radius of the car when you are rotating the steering. So companies have brought in certain equipments wherein the front tires, when you rotate conventionally, the reverse or the rear tires stays at the same location. But in these new actuators, which are connected like a reverse steering system, wherein if you are, let's say, turning the car to 90° towards right, the back tires might rotate maybe 3 to 4 degrees on the opposite direction to give you a smaller radius. On the cornering also, that helps you. Maybe the video will explain you better. This is without any reverse rear steering system. You see the wheels on the right. All the 4 wheels are rotating. It's called AKC. It is again by one of our customer. How they call it? This is again on internet. We'll share the links later on. This is that turning radius I was mentioning. Now, if the car does not have this, see, it needs to go back and do it. Now, these are expensive equipments. You don't have mass adaptation, but if you don't work on these technologies, somebody else will. This system, what we are developing, this is for Porsche, the I think electric Porsche Cayenne or something, Panamera. I don't remember the exact model. Now, the adaptation of such cars is creating time, and this technology is in a lot of other brands as well. So the customer is selling to one platform. They are pitching it strongly to sell to other platforms as well. But we are the only supplier for both this ERC and AKC. Nobody else can make for the customer, and the validations are so strong, investments are so high. A lot of all the mechanical items, products are being done by us. Customer is buying the electrical. Of course, their focus is in the design and the assembly. That is their forte. So this is how we are developing those things. On the left side, the parking lock mechanism, as you know, BMW is launching a new electric car in 27. It is going to be one of its kind. There are a lot of media articles about it. They say it should be 1,000 horsepower electric car, M Sports. And in that, we are participating in this park lock mechanism. Basically, there is a technology which is confidential, which we can't explain. But again, this is a mechanism which is an assembly of around 50 parts, which we are making, we are buying also, we are assembling inside. The customer just has to engage this. This is right now under the prototyping phase. A lot of investments are going into this. The samples are going every month to the customer. They are going to take 2 years for this validation. I think in 2 years, they will be consuming roughly, I don't know, maybe 10 to 12,000 parts. So how many of that cars will be there? Some cars are actually running right now, maybe 100, 200 on ground for validation. So a lot of technology, a lot of work is going on there. And this mechanism which they are launching, again, we can sell to a lot of companies who are doing that. And the last is steering systems. So as you know, we recently got a business from we disclosed the name, na JJ, for this project for
ZF Rane.
yeah, we disclosed. So ZF Rane, we are developing this project. Basically, this is for a pickup truck platform for an American OEM, and conventionally they have a hydraulic steering system. So a difference between a hydraulic and electric. This one is a recirculating ball mechanism system. In layman, basically, when you are driving or when you are rotating the steering wheel, there is a hydraulic pump, and that runs the motor, which takes care of the torque. So the driver has to put less effort. Now this will be replaced by electric motor and a gearbox, which will take care of the torque, because every time the torque will not be same. So you need to have reduction in that gear set. So this is what this steering system will be. And this again is a project or a platform right now that customer is using hydraulic. Once it changes to electric, that is the future. Now you will not have very tight steering systems in the coming times. And this pickup platform is a very big market in US. And the assemblies will happen in Mexico, and then it goes to, this is a very hot prime project for the customer. So in one slide, I wanted to explain you, we have invested a lot in last 2 to 3 years in these projects. These projects maybe have not grown at the pace at which the customer committed, but eventually they have to grow, because as you know, the entire world is moving towards electrification, towards these smarter cars, safer cars, lighter cars. And these technologies are going to be differentiator when you choose a car on the road. You know, you will not now choose how a car looks or how that fast is, because every car is going to be fast. So these things are going to be differentiators of the future, and we have very rightly chosen the right pass car segment. And these are again, engine agnostic. Even if they are a hybrid or a ICE engine, these things will remain. A steering system will retain. This steer-by-wire is already right now in a lot of fuel cars. ERC, as I said, they launched in electrics. Now they're trickling it down to their mass runners as well, because this is getting a very mass response from the customer. So that was one slide on the pass car, how the next 5 years will shape the growth of the company in such projects. The next is the motorcycle platform. Conventionally, we have been always termed as making gears. That is something which we will always do and keep doing. But with the virtue of making a lot of gears, we have gotten a skill set or technologies to develop many other parts into the motorcycle platform. So one such is a wheel axle assembly. What you see, we are working on we have the technology or the components. The back wheel of the motorcycle sits on this axle. Axle assembly is a very safety critical and a difficult assembly. Not many companies outsource this to companies who are not well known in the market. So we are working on this wheel axle assembly, not for one customer, couple of customers. We are also into brake mounting housings. So this goes to the vehicle body, in the sense where the brake is mounted. On this flange goes, and this is again a safety component. If this fails, the brake fails, and you know what can happen if the brake fails. Transmission assemblies and engine timings, we're always there. We are getting new businesses like we explained you. This shifting drum mechanism we just explained, this is a new product line which will help us to augment our presence in the motorcycle portfolio. And we are very happy to share, and you of course know, I think we are there in 80% of the world's premium motorcycle brands, be it Kawasaki, BMW, KTM, TVS, Norton, Aprilia, Moto Guzzi, CF Moto. I think 2 or 3 are left. One we already got, which we can't name, and remaining, I believe, should come to us very soon. We also do some steering components of the motorcycle. The handle of the motorcycle rests on the parts which we make. This auto shift mechanism. Now you've always heard that a car can run in auto mode, wherein you don't need to do any engagement. Motorcycles have now auto shift mechanism, wherein you can choose, you want to manually shift the gears or you want motorcycle to change gear on its own. And this goes to a BMW motorcycle, I think R1300 or something, and it is getting huge response from the customer, and only one company is making this right now. Now, of course, when this gets mass adaptation to other platforms, many more customers will be launching, and we always have the first edge for working on such technologies. These are, of course, components of these technologies, but these are critical components. A company of our scale, we will move slowly to these critical assemblies, but components wise, yes, a lot of dependence of our customer is on such platforms. So the message through this slide is that whatever we have learned in the last 10 years in transmission assemblies, now we are expanding our presence in the other areas of the motorcycle, so that our vehicle value addition increases by offering more products to the same customers. Beyond automotive, this is one project, again, we invested a couple of years back, not getting good response, but the customer is encouraging us to be patient. This will grow in the coming years. Electric bicycles, you might have heard. Basically, there are two kinds of, one is a mid drive and one is a hub drive, wherein there is a battery attached to the cycle. And then there is a motor, which is either in the wheel or in the hub itself, which is in the center. These are bicycles actually, and they can do 30 to 35 miles per hour or kmph. But one such technology we are working with Pinion. All of these bicycles also have gearboxes now. Bicycles having gear is a very old phenomena, but we are not talking about bicycle gears. We are talking about bicycle technology, which is like an automotive gearbox. So this has an auto shift. If you have ridden bicycles, let's assume you are at gear 10. Now, if you want to cycle, you need to go back to gear 0 to start it. This has an automatic gearbox. You start at gear 18, the cycle will run at the same friction you need. This has this 1, 2, 3, again, we've taken from our customer. So this entire gearbox, what you see is in the cycle, which is mounted in. So when you are pedaling, so it is applying a force. which then shifts the gear determined by you, not by the sensors. It means that the gears can change automatically how you are the kind of torque. If you're on a hill, it can take care of that. So it is not transmitting through any shift mechanism, in the sense that there is no sensor which is sensing. It is the user who is deciding, okay, if I want to go at gear 18, it will automatically engage gear 18 and give you that much torque you need at that level. And then there is a motor which is running, which gives you that amplification so that your effort is very less. This is a very huge, I think, into 2022, the competitor to this company is Bosch. They sold 2 million bicycles with such gearboxes, and this market is evolving. These are very expensive bicycles. And as you know, in the coming times, bicycles in Europe at least are increasing a lot of prominence. And these projects are also taking shape slowly, but it is in anticipation to how these technologies are being well developed. And mind you, these cycles are 3,000 to 6,000 euros. So they are expensive products. Last, we also work on ATVs. So our customer, as we said, has product. We have products everywhere: snow, on road, off road, on water. We are not just doing gears. We are doing propeller shaft assemblies. We are doing components for turbochargers for the engine. We are doing components for axle shaft assembly. Some of them are painted. These are, having mass application. This customer of ours is, I think, top 3 in the world. There are many other companies like Polaris, and I think more companies are there who are making such ATVs. Right now, we are working with them, and slowly we can increase our presence. But again, this is not an automotive business. This is a separately vertical, and this vertical is generating huge revenue for us. In the last 3 years, it has grown like anything. This year, this is the highest segment. And I don't know, the entire market is in US and Canada. So far, touch wood, no impact on us for any kind of geopolitical situations which are happening, because the plants are in US, Canada, and we are supplying to Austria or maybe Canada, Mexico directly. But this is how, you're part of a company which is having a vision to keep evolving, to keep evolving its customer base, its product portfolio base. Yes, these all things are capital intensive. A lot of questions come in: why do you keep investing? Why the turnover is not growing at the rate? But you need to also understand, these are not end of the mill projects. We can work at a 10% margin and supply to Indian companies and be happy with it. At the same time, we are a passionate company. We are a passionate people who like to work on technologies which nobody else can. Some of you should visit the plant this time. We'll try to explain in more detail how complex these customer requirements are, how critical these assemblies are. If anything fails on the road, a person can die. So that is the kind of dependence our customers have on us. And these technologies are slowly getting mass adaptation as the money, disposable income in people's hand increase. The volume of such products will increase accordingly. I think I took more than the time I should have, but the idea was to explain you that how this is something which is keeping in mind that we are investing judiciously, but at the same time, we're investing on projects which are very futuristic. And this gives a lot of confidence to us that we are the first mover. To be honest, now when we are looking for some business in domestic, a lot of people ask us, I will not name the customer. So most of them tell us that we can't afford you. You are very expensive for us. We are, 100% green. Nobody needs this in Indian ecosystem. But slowly, Indian ecosystem is also adapting and evolving to such requirements, which the other companies will take time to come to our level. So this is from my side right now. I do not think we have any other things to show in a presentation. Good to see 68 people still there, so nobody left. Now I think Neha, we can have questions. We don't have any pre-registered questions.
No, sir.
So if we can have raise of hands, that will help us. Yes, so good. A lot of hands are raising. That will help us lining up. So I see 5 hands, 6 hands now. So we can start one by one. Neha, I think you can see and start.
Okay, sir. Mr. Vijay Pandey. Mr. Pandey, can you hear us?
You need to unmute Mr. Pandey first. We have enabled your mic.
Okay. Hi. Thank you. Thank you for taking my questions, and thanks for a detailed presentation. It was pretty helpful to know about the upcoming products. I have a couple of questions. The first one is just a normal. What was our FX benefit that came in Q1, like in terms of euro exposure?
Sir, your voice
Okay.
is cracking. Can you repeat the question, please? Your voice was cracking.
Sir, is it okay now?
Yes.
Yes, it's better now.
Just wanted to check what was our FX benefit in the quarter first from the euro exposure.
So, sir, this is as per the accounting standard. As per the accounting standard, all export receivables are reinstated as per the current rate on the last day of the quarter. And then the short-term borrowings and long-term borrowings, any loss or any gain on that gets adjusted below the line. So since you have seen
Okay.
that we have a predominant exposure in euro, and euro has appreciated significantly in last 3 months. So this was basically the reinstatement of basically as per the accounting standard.
So, like, do you have any figure from like in just was it 3-4 crores or 5 crores? Just wanted to check because our other income was significantly higher, so that's why I wanted.
Sir, it was over 7 crores, sir.
Okay. Thank you. And sir, secondly, I understand that we have got 2 orders from BMW. One is for parking lock mechanism and one is for electric drivetrain. So this is for both for BMW passenger car, or is it one for BMW passenger car or BMW motorcycle?
No,
And
both cars.
what is
So these
both are
both
cars?
projects are for the car platform and for the same model.
Okay, and our commercial production, this is expected to start next year.
Yes.
It is financial year 27, 27 years.
Okay, for both of these products, parking
They are
lot.
together because they're for the same platform. Yeah.
Okay. And sir, can you give us an update about the TVS Norton? What is the update? Is the commercial production started? Because we expect it to be launched in this year, later part
Yes,
of
you are
this
right.
year. So
Honorable
if you
Prime
can.
Minister Mr. Narendra Modi has already inaugurated that vehicle manufacturing system jointly with the British Prime Minister. And this vehicle is actually set to be launched in the commercial market probably in November 2025. So we have already got the orders and we are preparing for that. Yes.
No, we are dispatching in September from our side.
Yeah. And
to the
November is their
Okay.
launch here. Of course, the parts are under production, and of course, probably in September, October, they have to produce this bike here.
So we start to see a big benefit coming from Q3, if I'm correct.
Yeah, Norton is a brand, because it's a 1.2 liter motorcycle, so we have to really see that how much volumes it picks up, because probably this is going to be the first motorcycle in India which is going to be with such high power and being produced in India. So, of course, more than us, TVS also will be over anxious to see the response. But yes, it is a new platform.
I think the assembly will happen in UK. The engine will be made here. The vehicle
Engine will be
assembly
made
in UK only, and then it is for exports market. And these are not high volume businesses, but these are high margin businesses.
So one last question. So this is on the KTM. So we understand that like KTM is shifting some part of production from Austria to India or either China. So do we supply to the KTM India or KTM China? And are we seeing any production ramp up after like they had stopped production for 5-6 months? So are we now seeing the production ramp up, or is there any delay again happening on that front?
No, first of all, I'll give you the update. KTM has already restarted production, and in fact, the full production has already started. But to have a full volumes, you also understand if a company remains closed for 6-7 months, so they have to revamp the entire supply chain. So obviously, they are also going in a very, very systemic and structured way, because since they already have faced bankruptcy in the past, so they do not want to now create too much of excess stock. So it will be taking little more time to come to their full volume production. But yes, you're right, production has already started and at a fairly reasonable level. And now your question of coming back to India, these all are futuristic things. Nothing is going to happen overnight. But yes, over a period of 2 years, 3 years, 5 years, it may happen, it may not happen. But this is very clear that KTM is not that they will stop production in Austria and they will start producing everything in India. So it will happen, some models or some strategies which will take some more time to really take shape. But one thing is very clear, if any models or production shift happens to India, so eventually we will be the beneficiary because we are already a approved supplier, so then the parts doesn't need to be revalidated. And regarding China, I think you might have already read the interview of Mr. Rajiv Bajaj. They are rather saying that they have to be very, very focused on developing the Indian market. So eventually, we don't foresee now KTM taking big strides in China. It will keep happening in Austria, and something may happen in India, yeah, of course. But in both ways, we are always, since, we are a kind of 20, maybe almost 15 years life partners with them. So rather, we are at the upper edge.
Thank you, sir. Just one more thing, just a suggestion,
Sir,
because we have.
I think
You can email it to us, or
yes.
can we please restrict questions to 2 questions, please?
No, what we will do is
Just
we will
a
have
suggestion.
to.
It's not a
Yeah,
question.
please.
Just because now we are doing the conferences call, so it will be great if we can also give a bifurcation between two-wheelers, passenger vehicle, and ATV revenue sales. That will be pretty helpful.
Sorry, what
That
do you
is all
want?
from
Your
us.
question. Your
It
question
will
was
always
interrupted.
come in
Sorry.
annual report. It always comes in our annual.
Bifurcation between passenger vehicle,
I think
Yeah,
ATV.
that is already there.
Annual reports.
we give in annual reports.
Okay.
Because quarterly it becomes too cumbersome for us to announce. But annual reports we always give.
Okay. Thank you, sir.
Thank you.
Thank you.
Keeping in view the time limit, we would request all of you to kindly limit the number of questions to 2.
Yes.
I would now request Mr. Yogansh. Mr. Yogansh, can you hear us?
Yes, ma'am. Am I audible?
Yes.
Yeah, perfect. Thank you so much for the opportunity. First of all, congratulations to the entire RACL team on winning these new orders. And it's always a pleasure coming and joining your call and listening to your commentary. There's so much to learn from the team. So, sir, coming to my 2 quick questions. The new business that we have won in two-wheeler domestic business, the mass volume product, could you also share what would be the capex outflow for this project?
Should I answer?
Since we got the order only 2 days back, so it will take some more time to calculate it.
But
definitely
we can answer you in this way. There are two two aspects to this. First is immediate start of production, which will happen with the existing capacity we have. Since some of the projects which we have certain idle capacities. Then there is a ramp up phase within 3 months of SOP. For that, there is a specific capital expenditure required, for which we are deliberating, deciding, and of course calculating. And as and when, if there are any additional funds which need to be deployed or raised, that will follow with the conventional procedure how we use.
Got it. So, Professor, just clarifying on that part, because so far our business has always been more value driven and less volume driven, and our plant and our setup has always been structured accordingly. While this is a mass volume product, and hence we thought ki maybe going forward you will need a bigger size capex. If is
Now,
that
as
the
I
right?
said, so this is cherry on the cake that we can start using our immediate capacity, since we are not in motorcycle gears from last 20 years. We are giving same products to all customers. So we will use existing capacities, which we have. As you know, we are operating at a lower utilization. That is the reason turnovers are like that. And we can use that immediately. So no capex required immediately to start. But yes, this is a high volume. We have never done such a high volume. There definitely capex will be required, but the quantum we are not able to share with you as of today.
Fair enough, sir. So secondly, on the various projects that we have announced in past, like Project Titan, Venus, if you could broadly highlight where are we in terms of the capex cycle of those, and specifically on the Project Venus, like you were mentioning that this is a very interesting project that we are doing for the steering wala component. I believe this is for the US pickup truck OEM, and
No,
we
that is
in
not
one of
Venus. That is something else. But yes, steering
okay.
project is for ZF. But go on.
Okay, so I think in one of our past presentations or con calls, we had mentioned that Project Venus ka prototype had to start from Q2 FY26. So what is the status of that?
No, so you're confusing two things. Venus is a project which goes to BMW cars. That prototyping is very much ongoing. And I think the first participant asked, one is the SOP, and sir explained SOPs next year, both platforms. The second part on the ZF project, prototyping has been done, submitted, parts have gone to our customer. The validations are going on. The start of production of that project is much later. It is in 27 or 28. So for that, we have good 1.5 years, because it's a bigger cycle. We are tier 3 in this. So it is a longer validation cycle. So it will take its own time for commercializing.
Okay, and so the ones, the projects which we are supposed to go live in 26, where are we in terms of the capex cycle?
That
Sir,
entire
can you answer?
capex will finish in this year.
Got it, sir. Got it. Thank you, and all the best. I'll get back in the queue.
Thank you.
I would now request Nayan Agility advisors to unmute themselves and ask their question.
Allow mic करना पड़ेगा नहीं मैं करूँ आप कर रहे हो
करिए sir.
हाँ
Yeah, hi, hello.
Hi.
Am I audible?
Yeah, please. Yes, you are. Please.
Yes, please go ahead.
So I just had a question regarding the inventory. As we had seen, there was a lot of inventory built up for KTM. So in the last con call, you said that the inventory will start reducing. So what is the status on that?
I'll answer you. First of all, the inventory has been already started liquidating, because since they have already started production, they have given us a complete firm plan. And in fact, whatever is the old inventory, this all will be picked up during next few months, or maybe latest by end of this financial year. And in fact, we have already started fresh production also. So that way we are all.
Okay, and sir, is this?
Sorry?
Okay, all right, sir. And the 25% EBITDA margins, are these sustainable, or these are just one-off for this quarter?
Nothing remains stationary. But one should always aspire for keeping the highest profitability. But in all our con calls, we always maintain that we will always try to maintain our business segment in a manner that it will always be a high beta margin business. But regional fluctuations, beautiful tariff announcements being announced by Donald Trump every day morning and every day evening. So it's really great. Nothing is stationary. So ours are anything between 20 or 25% is always our benchmark. So percent here or there always is there.
All right, sir, if I could just squeeze another question. The Project Crystal was for an American OEM, and after the 50% tariffs on auto ancillary product, so will there be a delay in that project? And so, like, what will be the update
Obviously,
on that?
no, everything is going as per track. Many times these tariffs are not actually business announcements, they are actually political announcements. So nobody knows which way the thing will settle down in coming few months. But industries or the business houses or the big OEMs will never fine-tune their policies on such volatile scenario. They will always have a long-term framework. So there is nothing stopping us for the futuristic development. So everything is going as per track.
All right. Okay.
But
Thank you, sir. All the best for the coming quarters.
Yeah, thank you. Thank you. Thank you, dear.
Mr. Ramanjeet Singh.
Yeah, hi. Thanks for the opportunity, and thanks, Prab Mayor, for that elaborative presentation. If I could just ask, apologize, it's a very broad question, but in terms of, when a layman like me looks at the emerging landscape for automobile, it seems to be in a flux because, we have ICE, we have hybrid, EVs, and especially I see a lot of OEMs in Europe, facing a transition challenge on, which way they would move next. So as a company which is very much into innovation, what is your guiding star for which technology to focus on? Like when you sit down and think for next 4 or 5 years, how do you define the path ahead? Given that you are involved a lot in developing technology which is futuristic. Thanks.
Yeah, I will answer you to your satisfaction. If you really see our broad business profile, it is very well diversified into passenger cars, into commercial vehicles, into motorcycles, and into off-road vehicles. Now, if you really see a transition of all these segments from ICE or hybrid mobility to pure EV mobility, highest risk is at motorcycles of, say, sub 100cc or 150cc products. That is the highest probability of transition, or I'll say the fastest probability of transition. And second is the passenger cars. So as a company strategy, I will say we have focused very clearly that in motorcycles, we will always insist for or strategize for premium segment. When we say premium segment, anything above 250, 300cc motorbikes. And this is very clear that with the current level of technology of electric vehicles or the EV technology, this high premium segment motorcycles, we do not foresee any immediate changeover possibility because many companies tried and then they found that it doesn't sell. So then eventually they stopped focusing onto this. So that way we always have a very, very safe strategy. In passenger cars, you all know that we started our passenger car entry only 4-5 years back. And incidentally, these 5 years were the area when the transition discussion started between fuel to EV. So as Prabh has already explained you in that one-pager slide, all our passenger car business is either EV or fuel agnostic. We are not making any investments, or we are not planning anything into pure ICE or pure hybrid platform. Either they are vehicle agnostic, the fuel agnostic, anything. It's whether ICE or hybrid or EV, our parts will remain. Second is we are spending efforts onto the EV technology, because we also do not want to be caught off guard. So that's the reason this BMW project, this Venus and Titan, which we always codename them, they are for a futuristic electric vehicle. But again, I'll say even in EV, we are not into normal EV. We are into, again, sports functions or high-end premium segments of EVs. And as far as agricultural machinery or the off-road vehicles or commercial vehicles, we do not foresee any transition. Like in AV, Prabhu explained to you that ATV or off-road vehicles or snowmobiles, you can very well understand that in snowmobiles, when a fellow has to use the snowmobile on a snow-patched area from where he will get the electricity on a mountain having with snow. Same thing is with the sea scooters. In oceans, you can't really drive electric vehicle. So that way, we do not foresee all such transition. So our strategy is very clear that impact of this transition, either we have strategized very, very clearly, or our product portfolio is such where we do not foresee any changeover or any major changeover. Some minuscule error there will always happen. And as you know, three-wheelers was also, in fact, I forgot, three-wheelers is also one of the biggest transition. So that strategically, we have already reduced our dependence on three-wheeler business. 7-8 years back, I think we were 15-16% of three-wheeler.
27%.
27%. Now I think we are 3%. Huh?
3. Yeah, 3.
3%. So this is how we have already de-risked ourselves from such transitions. I hope I have been able to satisfy your question.
Just to add, I think Mr. Singh asked, see, eventually when you are an innovative company, so we don't define ourselves to just a platform. Like Sir said, most of these technologies, even if they're in EV, the product or the technology base we have can make parts for even an aerospace product and for an aircraft as well. The biggest asset is our people, the knowledge about the systems, the procedures, and the mindset. Once you have that mindset, it takes 1 year to add technology, but 10 years to have that mindset to run that technology. So that is our biggest asset, which does not come on paper anywhere. That in last 5 to 8 years, we have developed a team of so strong engineers and people who can handle any kind of expectation, be a aircraft worthy wherein there are 0 failures, or even a three-wheeler where the competition is very high. We are still, if still having 4% business in three-wheeler, it means we are competitive. It means we are still able to operate at that pricing, which is profitable for customer and me also. And similarly, we are able to develop technologies which are very futuristic. So the biggest earning or the next 5 years of the company is taking care of this mindset, which can do wonders if given in the right direction.
Okay. Thanks for the input. So, you've already alluded to it, Prab, in your response. So, is it good to understand that, some part of, I know your hands are full, but some part of your mind space, thought space also goes to non-automobile industry, given that basically you are a precision manufacturing.
So BHEL, you already saw the roadmap. So again, we start from the top. So if we go into the non-automotive, so we pitched all for, BHEL is one of the Navratna PSUs of India. And I think they are number 2, anyone in Navratna. I think the first is
BHEL is still, one which we can't disclose that, the meeting we had last week. So of course, we are doing a lot in industrial applications. As I said, we are very aspiring as an organization. 1000 crore ke aage ka we are thinking today, Because till 1,000 we are comfortable. So how does that happen? Is having a vision which can take us there.
Okay, thanks a lot. Thanks a lot for your answers, and
Yes.
best of luck.
Thank you. Thank you.
Mr. Piyush Jain. Mr. Piyush Jain, you may unmute yourself.
Am I audible? Am I audible?
Yes.
Yes.
Yes, please go ahead.
Yeah. Thank you. It's always a delight to attend the RACL call. Thank you, sir. Thank you, Pramod. Thank you. From my first day of call attending today, I think I always learn something about the cars and bikes and gears and all, and it just mesmerized the size of RACL companies doing so much of good work. Matlab, kudos to you guys. I have a one or two small question. If you have, because I joined later, if you have given any guidance with respect to top line or something growth for 1 year, 2 year, 3 year, just if you can repeat, if you want to give any guidance, something. And second thing, with respect to how much capex we are planning to do in next 2 years, and we have raised some preferential allotment money also recently, and what we will use for those money for reduction of debt or capex. What is the debt positioning could be after 2 years down the line?
So
That's it,
yes,
you answer.
yes. So thank you,
Next, you
Mr.
answer.
On the guidance for this financial year, we have already disclosed in our last board meeting. We had already disclosed the budgeted turnover for this year. So we are still abiding by the same, and we are targeting the same budget for this financial year. That was your first question. To answer your second question, right now to answer your third question, I'll answer your third question first. The money which has been raised through preferential allotment and all, the entire money, apart from after meeting all the issue expenses and all, have been utilized to predominantly to reduce the long-term debt and some amount to reduce the short-term debt. But the entire money has been utilized to reduce the debt as of now. And on the capex part for this financial year, the fresh capex which we had already announced last time, the fresh capex for this financial year as of now is close to around 50 crores, and the corresponding the new debt which will come will be 75% of the same. So these all figures are already disclosed.
Okay. And just one thing, congratulations for the getting the process approval from BHEL and all. So just as a broad, what type of size of this industrial business can become? Because right now purely we have a predominated automobile business only. Down the line, let's say 2-3 years, maybe a BHEL, maybe some other company which might also be getting panel. So what type of size we can see? It could be around 15-20%
No, I
of the
have
top
already
line.
answered it. Sorry, please continue.
Yeah, that is what I'm asking you. What type of
So,
contribution size
as
it
Ram
will
already
become?
told you,
And
Bharat Railway, BHL is one of the third which we already got approval, so we shared. Right. Likewise, we are talking to many big conglomerates from USA. They are not actually USA; they are the global companies. In USA, they have presence in US, Europe, Germany, England, Italy, so on. So we are talking to them. So many such avenues. Industrial segment or the construction segment has a huge plethora of business opportunities. And this is the segment which we have started thinking on this. And our strategy always remains like this. First, we incubate ourselves. Like I will just give you an example. This Bharat Heavy Electricals. It's not that we got vendor resistance. We just went there and they gave us. We worked with them for the last 2 years for, I think, 2 or 3 different projects through tendering route. Now they awarded us those businesses, and their top man was saying, Mr. Singh, we have never got such good quality in first go from any of our suppliers. So, always we incubate, because if we enter into industrial sector, first of all, we picked up some specimen production line, we developed them, and we understood the thought process, the thinking process of the infrastructure segment or the industrial segment. Now, and when we did the best, now we will try to grow it up. So now only time will tell how much growth we can achieve through this. But as automotive segment is always there, so this industrial segment we are also thinking. Both the segments are totally different. Automotive segment is a mass volume, high volume, and by a consistent segment. Industrial segments or such construction segments, they are generally not very high volumes, not having huge year-on-year growth, but having good profit margins. So we have to have a balance onto this. It's not that if we are going to industrial, so then we will reduce our focus on automotive. Automotive or this, even when you say automotive or non-automotive, even if you now see, in automotive, normally people consider passenger cars and two-wheelers as automotive. Off-road vehicles, agriculture machinery, they are even now non-automotive.
Yes. I was about to say that I was about to mention that even today we have 40% business which is non-automotive. So
non-automotive, yeah.
This conception that
non-automotive business, yeah.
So this conception that we are 100% automotive is not correct.
In fact, all the Indian calculations, even commercial trucks, they don't consider them as automotive. They consider them as a infrastructure, or the trucking industry is not considered automotive. Automotive actually is considered only passenger vehicles and motorcycles.
Sure. My question was little different. Actually, I was wanted to check any industrial business which we will get in future. Do we need to do a separate capex for that, or our existing facility will support it?
Look, it's little complicated for us to answer, because until we get the business, we can't really know that whether we use the existing technology or we have to put those technologies. This all depends. When you start hunting for a new business, so you do not have what you have, only you will get that business. Once the business matures, we have to really see that what kind of business it will be. Although our focus will always be that first we should be able to utilize our existing infrastructure. But if business is promising, if business is good, so and then if capex is required, definitely we'll love to do the capex, because one thing is very clear, irrespective whether it's automotive, non-automotive, industrial, non-industrial, we will always work with the top of the line businesses where there is no risk of investment. You know what happens? Making investments is not a bad thing. Making risky investments is a bad thing. So many times you invest on some risky businesses which do not have a clear visibility, or you can't trust them 100%. So that is absolutely clear. Irrespective.
Sorry to interrupt. Actually, I was coming from your quotes early, because in the past also you have said we do capex only when we have a visibility of orders in hand or orders in something. So that is what my question is to understand, like this government organization and BHEL and all, etc. How you will plan this? You will do capex first, or you will get order, then you will do capex. The fresh facility or capex needs to be done, or it's the old structure, infrastructure can help. Just wanted to get some idea on that.
First of all, I compliment your good memory that you keep my words or our
no memory. It is not memory. People document whatever we say. So
yeah.
It's not about
history.
I will just interrupt. Sir, I will just interrupt. I am an investor in RACL and I don't document anything in RACL. I am an investor in RACL for last 5 years. In last 5 years, and I'm telling you, I don't need to go quarterly result here and there something. I just look forward to listen to you guys in quarterly earnings call. That's it. I'm investor in RACL from last 5 years, and I
Great.
don't document anything related to RACL.
We are really glad to have such long-term
That's a compliment to
investors
the
in
that's a
our
compliment
company.
to the team. That's a compliment to the team.
No, we are really very glad to have such investors who always work with us as a long-term trust builders on us. But I'll say, since you raised this question, I'll again answer. Whatever I said few years back, today also maintaining the same. We will not make any investment. I told you very clearly that it's not that we first invest and then start hunting. That's what I'm saying. When business will come, as I told you today, that our prime interest will be that our existing capacity, first of all, should be able to be utilized. But you also know it that it's not that we are always having any unused capacity, which is totally wrong, because we never invest until there is a business. Okay, so even in the infrastructure sector, our prime interest will be it should revolve around our existing investment. But if any new investments are happening and if there are big buyers, why not? We will make investments. So bankers and investors like you are always there to support us in investment needs. But on a very, very clear note, we never make any large investments in anticipation. Okay, we are now entering into infrastructure or industrial segment, so we should invest 10 crores or 20 crores or 100 crores or 1,000 crores preparing for this segment. No. We will first hunt for the business, get the clarity.
Just wanted to know. Just wanted to know that is this still continuing the same or we are changing anything? That's the only.
No, absolutely. You know, it is either yours money or investors' money or bankers' money. I am just a custodian. So we'll always invest judiciously. Yeah. We never invest with a, even like I think you asked this question in case of preferential investment. Even we got them investment from the stock market or invest for the investors. It's not that we'll change our investment strategy. Investment strategy will always be very judicious. Thank you.
Sure, thank you.
Thank you once again for being our long-term investor. Yeah.
Okay, so I think we have 6 more questions and already 1.5 hours into the call. Mr. Tej Patel.
Yeah, am I audible?
Yes,
sir.
Please go ahead.
Yeah, thank you so much for the opportunity. I will just quickly ask my question. So, I just wanted to a broader question. So, we are planning to touch about 1,000 crores of revenue by FY29, and you already said we are planning beyond 1,000 crores. I just wanted to try and get your view on from where are we expecting this growth to come from? Will domestic market be a major focus area for us? Are we ready to take up, let's say, more volume based order rather than value based order? I just trying to tell you from why I'm asking this, because if I look at your customers today, they are all cater to the premium categories of the respective vehicle category, which itself is growing at, let's say, about a single digit volume growth, right? Even if I look at their numbers for, let's say, the last 2 quarters in their commentaries, Europe overall has been slow. And the domestic mix, of course, is increasing for us also. So I'm just trying to understand your view, where, from which segment, from which category of customers, from which product category do we expect to ramp up fastly and achieve the 1,000 crores growth. So just wanted to understand your mindset and one broader, if it do we anticipate, just wanted to get your point of view given the current geopolitical scenario and the tariff scenario. Do you see the export getting, let's say, the sustainable growth towards export getting been impeded because of the situation? And do you see the yourself de-risking it? What are your strategies? Just wanted to get your views on it. Thank you.
Yeah. So first of all, I'll answer your first part of the question. In all our business, whether it's a 500 crores or 1,000 crores or 50 crores or 5,000 crores, we will always keep focus on value-based business. Our focus is very clearly volume-based business. Of course, volume will bring only the top line, but bottom line is very important for us. So we'll not really hunt for business. Okay, whatever is the cost here, you just get it. So we'll always keep focus on value business. And our focus is very clear that we always create our premiumness. Okay, we are not into run-of-the-mill business. Now to answer your second question, from where the volume growth will come. If you have really seen our presentation today, we already told you that in 2027-28, we are getting a big business into this electric power steering, which Prabh explained you for a pickup truck platform. You know, the biggest good thing in that project is that is actually a currently running platform pickup truck in the US. So it's not that it's a new vehicle. The customer is already producing 250,000 pickup trucks per year. Only thing is they are changing from hydraulic steering to electric steering. So that business will not have any ramp up. That will be sudden increase of business. And I don't have the exact numbers handy, but probably if you have some indicative numbers, but I think it is pretty high revenue per year. Huh?
Revenue we can't disclose, but the volume is around
pretty high volume. We have only
200,
almost
200,000.
200,000.
But
so that is the biggest revenue generator. Second is Europe. Okay, you say that Europe is declining or Europe is consistent or stagnant, but I will tell you what we see in this media. Europe sees only, well, of the media generally sees European economic numbers. But you know, automotive platforms, whether they are motorcycles or pass cars, Europe doesn't produce only for Europe. Europe produces for whole of world. You know, whether South America, say Africa or USA. Okay, in Asia, I will not say that Europe has much exports from Europe to Asian countries like India or like China or Japan. But the rest of the world, basically the American continent, North America, South America, Europe is a big player. Africa, you know, Africa doesn't have any car manufacturing facility excepting maybe one facility in South Africa. Otherwise, whole of Africa, there is no facility. So Europe is a feeder to the entire world. So automotive, okay, I'm not saying that they're growing 10% per year, but they're not also declining like this. But you know, there are some transitions are happening, so they all stuff is also affecting it. Coming to motorcycle business, European motorcycle business is a pretty stable business, but you also see that we also saw these headwinds, or we foresee these headwinds, and we already captured business from India's, or not India's, I'll say it's the world's largest premium motorcycle manufacturer. So you can guess who are the customers. So we already took the top of the line business. So we have maintained our premiumness. We have got a high volume business. So eventually it will add to our volume generation or the revenue generation in a big way. Likewise, we have many new discussions, because as Prabh told you, that up to 1,000 crores visibility is already there. And that we have already said that by 28, 29 kind of financial years, we have to be 1,000 crores. Now we have started thinking beyond 28, 29. So you also understand that we still have 5 years to work. So we have started our roadmap, and there are many new platforms are coming, because these tariffs and all such stuff, whatever is happening across United States, believe me, as an industrialist, as an entrepreneur, or as a businessman, I'll say, I always see silver lining in this. I always see half glass full. India will never be a loser out of this. India will emerge a winner. And the way our government has taken a tough stand, I really appreciate this kind of upmanship. I personally feel whenever there is a conflict, and conflict is suddenly jacked up, it is very clear that the settlement is in the horizon. So somewhere these tariffs things will settle down. You also understand, sorry?
On that tariff, I will also share that experience we had last week. So we were negotiating some business. I will not name the customer. So how the world is evolving. So the price is now being discussed as price without tariff and price after tariff. So they are actually putting this into the consideration. And the customers it was a deep American company, and we said our terms are clear. Custom duty clearance is in your scope. Our landing price is this. You pick from our gate, then what needs to be done, you can take care. And they were also flexible. They said, fine, we can of course put in this as a margin. For example, if we quoted 100, everything is subject to negotiation. So let's assume his expectation was 80. So we said, yeah, so this 20 can be our contribution towards tariff. So, that ways people are waking up to this reality, and it will be short lived. And companies cannot have strategies for long term with short term problems.
Exactly. And I'll also add one thing, imagine, because sometimes, as I already told you, the businessmen, business houses or big industries will never make strategy on these political statements. You imagine when you put 50% or 25% tariff for India, and next morning we saw a Twitter statement by Donald Trump, oh, billions of dollars have started coming into the United States. Now, it's a public platform. I should not be really speaking like this, but I personally fail to understand how come by increasing the tariff, the billions of dollars have started flowing to USA. Because it's very clear tariff is being paid by the customer, not by the supplier. So it's very clear these all are just statements to settle some other issues which are more underlying. So I don't feel that this tariff thing is going to have any long-term impact on the business strategy between USA and India. Believe me, USA and India are long-term partners, and this partnership continue to go. And let's not really get excessively worried. And yes, if it really something really catastrophic happens, so then why RACL? The whole of Indian industry will be together. And India is a big market, so you should understand no country can ignore us.
Great. Thank you so much for the detailed answer, sir. So I'll just club two of my questions. I know you have said that we are probably, doing capex of about 100 and 150 crores in the next 2 years. If possible, could you break it down how much in this financial year and how much in the next financial year? And is my understanding correct? The incremental growth, about 25-30%, which we are projecting this year, is expected to come from the new projects coming live in the second half. Is my understanding correct?
So as I've told you, we have finalized this year capex till now. So this year capex as of now is 50 crores. The figures of capex which we had disclosed earlier was over a period of 3 years. So the next year capex and next to next year capex have still not been finalized. But out of that total capex which we have declared, this year we'll be doing a capex. Till now we'll be doing a capex of 50 crores. And the growth, growth part you want to? He's saying it's growth coming from only the new business this year.
So that we already explained, Jajana. I think it's a repetitive question.
I think we already explained. Growth is coming from existing business. New nominations we already got.
Yes.
January 26th, the SOP is starting, and for that we are not making any capex.
Yes.
We already, let us be very clear. We had some idle capacity for KTM.
Yes.
So we are not going to do it, and then when KTM grows, we'll again invest.
Yes.
So now we are a flexible company. Yeah.
Perfect. Got it. Thank you.
Yeah,
Thank you.
I think now we'll finish now, and maybe another 2 questions. 3, 2.
Mr. Preet Pitani.
Thank you for the opportunity. Am I audible?
Can you be a little louder, please?
Yeah. Am I audible now?
Yes.
So my first question would be line on the tariff cost. So if you can quantify the amount of tariff cost which we have in quarter one, and as we can see that the export to domestic fleet is 60 to 40 as compared to earlier guidance given of for FY26 was 70 to 30. So is there any delay from our customer? I understand that there will be no long term impact because of tariff, but any short term headwind we are seeing because of this tariff?
I think we already answered that in the last question.
We already told you, tariffs, we are not having any tariffs in our costing. Our terms are always at the port only. So no tariff impact on our costing. And businesses, this 70-30 or 60-40, whatever we are discussing, our own focus is to now focus more and increase our focus on domestic market. So that is it's a kind of mitigation of all such volatility. Where you see that on one side, you all know KTM was down for almost 7-8 months last year. There was a lot of volatility in export business, but we were still able to match our 23-24 performance. Rather, we had a notional growth of 1%. So that really shows companies really fit in maintaining our top lines and bottom lines. Irrespective, I sell in India or I sell in Europe or in Japan or Pakistan, it doesn't mean. End of the day, we must actually get revenues. So this 60-40, 70-30, whatever is there, nothing can be stationary. It is always range bound. So I'll say, let it be 2/3 export and 1/3 domestic. It can be 60%, it can be 35%, 65%. It can be 70%. So some variations will always remain, but primarily will remain export-focused company. But there is one more thing. We already explained in the previous interactions. Many businesses which were actually exports business, now they are also converting into domestic business because Kubota has acquired Escorts. So now it has become Escorts Kubota. So now parts are still going from us, but now Escorts Kubota does the consolidation. So eventually that business has shifted from export category to domestic category. So when it has come 60-30, 60-40, doesn't mean that our export business has gone down. It is a kind of say that route change. Initially, we were exporting directly. Now it is we are giving to their aggregators. Same way is our Samedoids for the Dalia business. Until last year, we were doing the entire business to Europe. Now Same has a factory in India. They say we'll do the consolidation. That also has a little impact. Some businesses are being restructured from purely export business to domestic business. So, it gives us an advantage. So our receivables also get improved and our continuity business is always there.
And just to add, I think as a concluding, most of the businesses are also shifting because of the low cost, but it is still an export business. So for example, we make motorcycle parts for Piaggio, for let's say Norton or TVS, or even BMW is making bikes in India. They're actually selling more in export market than in domestic. If they're making 170 are exported, 30 are only for India because Indian market is still not ready for that pricing or that premiumness. So in that, like ZF Rane is also a domestic business. My payment will come in 40 days, but it is an export business. It is for American market. So that way our strategy is still export centric because end customer is now making in India, maybe selling only abroad. So even if we are exporting to Europe or we are making in India, the application of the product is across the world. So that also needs to be always considered, that domestic business, because I think the question is coming, domestic means maybe less premium and then they want to factor in their Excel sheets maybe. No, that's not the point. Point is business will always be of that same margin, but actually it will be better because your payment will come in 40-50 days. But the premiumness, the quality consciousness, the application will still remain global in terms of how it is being sold.
No, you are actually raised very valid observation. That's very clear. Whatever you do for TVS, it's all basically instead of exporting the entire motorcycle. Same with Aprilia. Aprilia has produced last year, I think, 9,000 motorcycles in India. And I don't remember exact number, but I vaguely remember they sold around 1,000 motorcycles only in India. Rest all was export. So technically it is still an export. I'm not exporting, somebody else is exporting.
Yes. Okay, I think it is already 4. We can take one last question from Dheeraj, and we can end it. So I'm unmuting.
Sorry, sir, my one more question was there, if I can.
Sir, you can come back in the line and then we can answer all your questions. Maybe you can write it to us.
Hi,
Yes,
Prab.
Mr.
Thanks a lot for the opportunity. Thanks a lot. I'll just, in the interest of time, I'll just ask my question quickly. Given that we are only focusing on low volume, high margin products, that restricts our, market opportunity in a way. So, how easy or hard is it for us to get entry into aerospace or defense as an opportunity? Because end of the day, that is the next ancillary opportunity. I think we will need to enter to really, enter into the for acquiring a bigger market, right? In order to grow from 1,000 to say like northwards of like 1,500, whatever, right? So, what is the view there? What is the thought process there?
See, I think what I explained early, it is the mindset which is required for aerospace, not the technology or the plant and machinery. That mindset we are building in last 10 years is preparing us for aerospace. Aerospace is no rocket science. It still operates within the same parameters. Only thing what changes is the traceability, the documentation, and the third is it has to be a 0 ppm. Your products cannot fail. That is the only precondition. And the gestation periods are very high. It is a learning curve. Every organization goes through that, and aerospace will happen at its own space and at the right time, because right now we are very focused on generating this growth, which we have now brought to this level. So next 3 to 5 years are the growth times wherein we want to build in a good fundamental base. And then this is a journey beyond 1,000, maybe inorganic, maybe how we can use our existing know-how by being that supplier who can, create its presence. Because we have worked in aerospace in the past, we have certifications from, HAL. We have worked with them. We have worked with many other Indian, in that ecosystem. So that we understand our heat treatment lab is actually aerograde certified by HAL. They don't do it. So certifications wise, it is not difficult. And the kind of these electric cars are being made, they are actually aerograde technology in terms of that requirements. So we're slowly ramping up to that. Mindset is very important, and I don't think it is difficult to achieve that.
No, understood. Prab, just a small doubt. If we are saying that our power steering is actually agnostic to ICE and hybrid and electric, why do we term it as electric power steering?
Sorry, come again.
It's power steering is of two types. One is hydraulic assisted, one is electric assisted. When you say electric power steering, it means the steering system works on electricity. There is no
motor
hydraulics. Yeah. So
but we have both. We have both.
It's not for the EV. It can be, even in India, there are many cars which are having electric power steering. So, electric power steering, because technically, when we say power steering, generally there is a hydraulic pump which is driven by the engine fan belt or the engine timing system. But in electric power steering, there is no hydraulic. It runs through battery or through
basically there is a motor, there is a ECU, and then the gearbox.
No, it's very clear, but it can be used in ICE also, is what you're saying, right? Electric.
Yeah, it is for ICE only. This project is for ICE only. This platform. So
project will be for ICE. It's not for EV.
I'll clarify. Electric steering system is very much predominant today in pass cars of a smaller engine. Let's assume maybe a Kia Seltos or a BMW will have it. We are talking about a pickup truck platform where electric steering systems right now are not predominantly there. So this is again a new product which is being brought in, all put together for this segment. I don't know if you understand pickup trucks. These pickup trucks are actually vehicles, but they're huge. They are engine wise and load wise. So there having electric steering system means it needs a very big assembly. So that is something which not many companies are able to make it. And this is for the first time this platform will have it.
Got it. Thanks a lot, bro. Thanks a lot for the
Thank you.
Yeah.
Thank you.
all the very best for the next quarters.
Okay, I
Thank you.
think
You're closing to this.
So I think now let's conclude it.
Yes.
Yeah.
Yes.
yes.
Any closing remarks from your side?
Closing remarks. You opened it. You should close it. Yeah.
Right, so thanks a lot, everyone. I think it was this call was quite interactive. We are really glad and humbled to receive such a response. I think in last 4 or 5 quarters, for the first time, we have got more than 70 participants. This again, I'm presuming this is a testimony of some good work which we have been doing, which has given so much interest in the market, and we feel quite humbled by the response. Thanks a lot, everyone, and have a good weekend. Thank you.
So I will just conclude by adding, while talking, I got one message from one of the investors. I will not name him, but he says that proud to be your shareholder. So much clarity on the path chosen and always ahead of others in terms of investing, developing, and visualizing. You are not a 500 crore company deserving to be 5,000 crores. Regards. But I answered him in a humble way. Well, thanks, dear, for such thoughts. While it makes us glad to read such sentiment, it keeps us always enthused to perform continually. So your calls are very, very happy moment for us, but it definitely gives us many, many sleepless nights. We have to get ready for the next caller.
Yes, sir.
Thanks, dear.
Thank you. Thanks.
All the best to all of you. Have a good now rain-free weather in Mumbai.
Yes.
I know most of people are from Mumbai. Yeah. Thank you.
Thank you. Thank you.
On behalf of the management, I would like to sincerely thank all the participants for joining and engaging with us today. Your participation is greatly appreciated. I would also like to extend a special note of gratitude to the management team for their thorough and patient responses to all the questions raised during the session. Thank you, everyone.